Thank you for joining us on Triathlon Partners TV. This is Ira Koyner, the original IRA, and we have a super fantastic episode for you today. You're going to be glad you tuned in. This one, particularly for business owners, physicians, dentists, people who own property that perhaps are cash poor but asset rich. Right? We have a way at Triathlon Partners to help you keep more of your money for longer. Right? Listen up. If you're also a real estate professional, a business broker, an accountant, and you have clients that are looking to exit, but their goals of what they need to exit aren't quite there yet in the market, this might help them. What we're going to do is talk about the Deferred Sales Trust today. It's a fantastic product. Triathlon Partners works with people that know how to do it right. Very important. What essentially it does is it lets you keep more of the proceeds from the sale of an asset, right? And you get to keep those proceeds as an investment over time, generating more income for you, and you pay taxes after that period of time, as opposed to paying taxes up front, generating less income for you. Right. Let's give you an example. We'll hop right into this. Okay. You're a business owner, right? It could be a physician, could have a small business, could be a middle-sized business. Let's say you've owned it for 20 years, just doesn't matter. In 20 years, you've owned it. And maybe over time, you've put in $500,000 into it. Right? That's your basis, right? You've had a lot of organic growth. You sell it for $3.5 million. Fantastic. Good for you. That's great. What are you going to do with that $3.5 million? Well, you had a $3 million gain. First thing that's going to happen is write a check for $1 million to the government. You got your long-term capital gains, right? You got your NIIT tax at 3.8%. And then you're going to have your state income tax, which how most states actually tax capital gains, right? So all of a sudden, 33% of the stuff out the door. You got the 20%, the 3.8, and between the 6 and the 10% on your state taxes, right? Out the door, $1 million out the door. You're left with only a $2 million gain. Okay, what are you going to do with those $2 million? Well, you've retired. You need to create income, right? And you want solid income. So 5% a year. You don't want to risk your money. That's great. 5% a year. You just use the interest, and 5% a year on $2 million is $100,000. You have $100,000 for the rest of your life, and then afterwards, there's $2 million sitting right there that could be passed on to your heirs, or if you use it over the course of time, you're just getting less interest, right? But we'll just say you have this 20-year time period, 5% on $2 million, $100,000 a year times 20 years, $2 million. Fantastic. So you get $2 million of income, and then at the end of it, you're going to get $2 million of your principal back, right? Okay. Alternatively, what we do is we set up this deferred sales trust. Fantastic, right? Right people, the right time. It's great. Okay. You got your proceeds of $3 million, right? $3.5 million, and $3 million is taxable. Guess what? Because we've done this with a trust, and the trust owns the asset when you sell it, and the trust gives you a promissory note to pay you interest on the money that the trust has after the sale. You have $3 million. You do not have two. You have a $3 million gain. And because you're not paying taxes yet. So take the 5% that you're earning. It's 5% on $3 million. It's $150,000. What's $150,000 for 20 years? Right? That's $3 million. All right, that's great. So you could have the situation I presented first or the situation I presented second. Second situation earns $150,000 a year versus 100. So over 20 years, that's $3 million, not two. Got $1 million more in income. Fantastic. Then 20 years come out. Money comes out of the trust. Time to pay the tax man. Tax man still got you got a $3 million gain there. Well, you owe us a check for a third of that. $1 million go out the door. you have $2 million. Well, what did you have before? The other one, you still had $2 million. Basically, if you put the money in the trust, you get more income. At the end of the day, you have the same amount of money. I think that's great, right? Because that will allow you, as a small business owner, a physician, a cash-strapped, perhaps retiree who has a very large house, maybe on the water, real estate professionals, you know who we're talking about, right? That extra money, that extra income can get someone to want to sell their house. It can get someone to want to sell their business because the value that they're getting includes the DST. All right. Well, this is great. I hope it's given you a lot to think about because it's fantastic. It really makes a difference in a lot of people's financial decisions, and it's all for the better, right? So when you have something like this, you need to talk to people that know what they're doing. It's a very complex product. Broke it down pretty straightforward, but Triathlon Partners has the partners out there, has the professional networks to get this done, to add value for you, the entrepreneur, the physicians, the people with assets very high, with very large profits, right? And we also can help you, the accountants who speak to the business owners, the real estate professionals that talk to people who want to sell their house, who want maximum value. That's what we provide. Maximum value at Triathlon Partners. We go the extra mile. All right. Well, thank you very much for tuning in. This is great. Once again, Triathlon Partners TV. Ira Koyner here, the original IRA. You have a very blessed day and a super fantastic new year. Take care.